Welcome to another day, another video, another trade, an ICT and kill zone of the London Open.
I saw your show in London.
So I did my analysis around 7:30 Italian time, so 6:30 UK time, and in preparation for the pre-market, which I entered in, and the continuation into the open. So what we're going to have a quick look on the euro dollar, and as you can see, we will start on the 15-minute chart, but our bias comes from the daily.
Forgive me, but I prefer to see the event alone without bias. And
we have identified these swing highs here as the area of liquidity. This is eventually where buy stops will be taken out. We're still in the same play this week, and it has been the bias being long. So if I delete that so it doesn't make the chart messy, what you can see here at the bottom, after taking the liquidity out, potentially coming down into filling this value gap here.
This installation has a substantial dollar value attached to it.
Okay. Obviously these are day candles, so that will take a while. We have news, Fed coming up this week. We've got the last Fed announcement before Christmas. We also got interest rates today, this afternoon. So this might create some potential volatility. If we go back on the chart and we go on to the breakdown, we've got our bias from the daily, and then we go down to our 15. So we're looking for longs basically. And you can see this is the, we're on the 13th. If we go back to the day start here, the market went up, faded down to create this low, but never broke the low to continue to this intermediate low down here, which we had that spike in the previous weeks. So the signs were that the price was going to be accumulating stops and liquidity on the upside before we go towards those bottom, the bottom daily value gap that I showed you earlier. If I go into the 5-minute, that's the 7:30 candle. So that was the high at the time. And what did I want it to do? It broke up. I was watching this from 6 o'clock onwards. It broke up to the upper side. And if we put, as you can see here, we don't have any fair value gap, obvious fair value gap that we can take because we're looking for longs. So as long as this low here wasn't broken to the downside, I was happy to buy into that.
No, I was happy too.
A discounted price into that swing high. So what we did is we went down to the frames to see if there is any value gaps. And I did, but I do believe that I found it on the 15-minute, which was there. So you can see we broke on the upper side. We broke this swing high here. And we had, if I delete that, we had a value gap there. That one there. So if the price came down and tagged me in, I would go long, and that's what happened. I got an entry there, and I had two positions in, went up. I took out one position on the highs. Why did I take profits there? Because we had this order block here, and the order block had a buying candle on that high there. So I used that to take some profits. I did think that we're going to break this and finish the trade there, but then the trade came back down, and I re-entered that second position, and it also continued down all the way to here. And if you look at that area and we go on the 1 minute, that crashed down, stopped right there, right? So if you look on the right side Let's zoom in. Where's the zoom in this area? So we've got that one there. If you look here, we had a value gap. A small one, but it was there. Value gap there. If I extend that to the side, it's going to be hard to handle, but we're going to do it. Extend that to the side there. That value gap got filled. So we had the original value gap here, continuation, didn't break the low, and then it screamed up, and where did it stop? On the value gap on the top. So if you're looking for targets from here, we had our entries here. That's why you'll see some closing positions that I've got £1 and £2 is because I closed those positions when it came and filled this place here. So let's delete that. That broke structure on the top seller side, selling down. So if you take this, you can see the value gap from that candle down to there. If you're confused to what I'm talking about, let's zoom in. Is that gap from this wick here to that candle there. There haven't been buyers for the selling that happened. So imagine someone did a big order and someone sold here and the price went from 105 all the way down to 105.4. All these people that have been trying to buy the market missed out because the market just crashed down to this area here, a bit like a gap. So what the algorithmic trading does, comes and refills that market, comes down, takes sell side liquidity on the bottom, breaks these lows, and what does it meet? That daily low. Did it break it? No. And now it's gone up to break this area here, and this is another area where you can start looking for longs like this here, which you can trade up into this target up here. And if you want to be more even safer, because that drop of the daily has been tested, so someone might think that that stop is too big, you can wait for a retracement for this gap value here. And I might even trade this because it's looking quite good. And that was the play. So what did we do? Let's look at the results. We got 149 after the commissions, 136. So quite happy with that, building that buffer on the account. And that is another London kill zone for ICT. Obviously still learning this. As I always say, I always manage the trades in and out with Scruffy Madness, which is another trader I follow closely, and I'm part of his Discord group. So I hope you enjoyed this. Make sure you subscribe, and we'll see you tomorrow for another trade, hopefully a positive trade. Have a good one.